Good afternoon, YouTube investors, YouTubers, and YouTubettes. Benjamin here, back again for October 18th, 2019. This afternoon, I wanted to discuss gold stocks. A few people sitting on the fence lately in regards to gold. A lot of talk about gold being the next safe haven in times of trouble in the stock market. I think the stock market's still quite healthy. Economics around the world may seem reasonably unhealthy to a degree. I'm not going to get into the global economics right now. We'll just say that with all that's going on in the US, between the US and China, negative interest rates and a little bit of unknown moving forward, what an interest rate adjustment moving up would do to the economy and how we'd fare over the next few years. US election coming up next year. There's a lot going on, a lot of headlines. It can get very confusing. I really want to talk about gold because gold seems to be one of these areas at the moment that, like I said, people may be using as a safe haven to hedge against the weak dollar, and people are quite bullish on gold. Back in 2011, I think it was, gold was around just over $1,900 US an ounce. Talking US terms when it comes to gold, just keep it in perspective. In 2015, I think it dropped down to 11 or 1,200. I have to double check those numbers, but it dipped again. But sitting around that $1,500 mark at the moment, sort of floating between $1,475 and $1,525 of late US per ounce. Now, mining stocks typically won't trade for a very high multiple. You've got Northern Star and Newcrest Mining trading at very, very, very extreme multiples. I think there's a lot of, forgive me for saying this, but I think there's a lot of dumb money in the stock market at the moment. So you see these rapid movements from week to week when people think the economy is going great again because of the next tweet or the next headline. The gold prices drop, 0.5%, and the stocks seem to drop 3 or 4 or 5 or 10%. Then people lose faith in the economy again the following week, and gold prices move up 1 or 2%, and the stocks really start going through the roof again. So it's creating a lot of volatility in the stock market in general, and especially around gold. Northern Star in the last week or two, and St Barbara Mines specifically, and I'm pretty sure Newcrest Mining, I haven't brought it up today, but I know Northern Star and St Barbara have really copped a hiding, and I say Northern Star is trading on a price to earnings multiple of around 42. It's incredibly high. I mean, it's a quality business, but for a mining stock, that's nuts. That's insane. I think people that are spending that much money on Northern Star and other gold stocks, they're really counting their chickens before they hatch. I'm bullish on gold. I think gold's a long-term solid investment. So considering it is a long-term and the short-term is quite unknown, maybe choosing a gold stock that has a very long mine life, long-term prospects. One that I've looked at is Regis Resources. I left it a bit late in the video to say this, okay, but the disclaimer, these videos are not for financial advice at all. Seek financial advice from a financial planner. Do your own homework, your own research, and make financial decisions based on your own objectives and goals. Don't buy stocks because I talk about it in this video. This video is just for discussion. So getting back to the gold stocks, Regis Resources is one I've looked at lately. They have 5 or 6 operating mines at the moment, and a whole bunch of other mines that they're doing feasibility studies on and they have interest in. They have a combined long mine life. Regis Resources. They have no debt whatsoever. Okay, they have approximately $205 million in combined cash and gold bullion as at 30th of June 2019. Regis Resources have much better operating margins and a much greater return on equity than some of the market darlings. Say I'll compare it to Northern Star as a direct comparison. Northern Star has a return on equity of about 15 or 16%. Regis Resources, much better value at just under 15 times price to earnings. About a third of the price to earnings is what you have to pay for Northern Star, so much better value and better margins. 25% profit margins, 35% operating margin, 25 to 30% return on equity. Let me just bring that up here. 24% return on equity, 16% return on assets. Again, no debt for Regis Resources. 9.8% quarterly revenue growth. They have a market cap. Let's bring up Regis Resources here. Regis Resources has a market cap of $2.4 billion with 508 million outstanding shares issued. They have a gross dividend yield of about 4.8%, so 16 cents. 16-cent dividend for the financial year 2019. Once you apply the franking credit, 100% franking credit, takes it up to almost 23 cents. So healthy dividend, just shy of 5% yield on Regis Resources. So healthy dividend, low price to earnings, great return on equity, healthy margins, no debt. My videos can seem quite repetitive because I look for the same things fundamentally in most of my companies that I invest in. I picked up Regis Resources last month for about $5.14. It's trading today at $4.80, so it's gone down a little bit since I bought it. Big deal. The last 5 years, it's gone from $1.28 up to as high as just over $6, $6.38 back in July this year, and it's back down to now to $4.80. Like I say, good fundamentals, long runway in front of it, long mine life. That's pretty much it for Regis Resources, ranked at 144 on the Australian Stock Exchange, or Australian Securities Exchange rather. So it's a ASX 200 listed company. I just find better value in this company than the likes of Newcrest Mining or something like Northern Star. Like I say, Northern Star trading at 42 times price to earnings. Crazy. Regis Resources, do some homework on it. Mining company is very, very, very extensive. To try and explain the operations of a mine to you on a 5 or 6 or 7 minute YouTube clip is a definition of a nightmare come true. There is so much detail in mining companies' mining statements to go through. You really need to do it yourself. Do your own homework. I'll put a link below for Regis Resources as it applies to marketindex.com.au. You can go through that page to the bottom there and have a look at company reports, AGM updates, and so on. Have a look, see if there's anything that you do or don't like about the company. Regis Resources, ticker code RRL. And if I had to pick today between Regis Resources, St Barbara Mines, Newcrest Mining, Northern Star, and there are some other mining companies, Alacia Gold, and several others. But one more thing, one other positive thing about Regis Resources, it's a low cost producer of gold. It's one of the lowest cost producers of gold anywhere in the world. So that's just another positive. It creates that healthy margin that I was talking about with Regis. Regis Resources versus Northern Star. I'm Regis Resources all the way. Ticker code RRL. Let me know what you think. Have a good look at it. Be careful with mining stocks. You can be 100% right about a mining stock and have the stock price go belly up. So you really got to pick your time. And if you do get into these things, good luck with it. I think it's a bit underappreciated. I don't hear fund managers talking about Regis a whole lot. No, I follow a lot of fund managers online myself. They're always talking about Northern Star and Newcrest, Alacia Gold. They even mention a lot. Regis Resources seems to fly under the radar. I have no idea why. If there's something terrible about the company, feel free to let me know. I can't find anything wrong with it, apart from the fact that it's a bloody mining company. But anyway, again, good luck with it. Thanks for watching, and I'll be back on soon with a different conversation piece. Happy investing. See you guys.